Hey everyone! Today we're diving into a stock that's been on an absolute tear. BSE, the Bombay Stock Exchange. Its share price has shot to an all-time high, and trust me, behind those headlines, there's a really fascinating story about financial mechanics. So let's get into it and uncover what's really driving this rally.
So, whenever a stock just rockets up like this, you've got to ask yourself, is this all just market hype? Or is there something real, something fundamental going on under the hood? Over the next few minutes, we're going to put on our detective hats, piece together all the clues, and figure out what's truly fueling this incredible performance. All right, our first clue, and believe me, it is a big one, it all comes down to the company's top line. The latest quarterly results just dropped, and they revealed something pretty spectacular about how much money the exchange is actually making. Let's just look at the raw numbers here. In the third quarter, BSE's revenue from operations jumped to over 1,244 crore rupees. That's up from 768 crore in the same quarter last year. I mean, that is a massive 62% year-over-year growth. It's a fantastic start for sure, but it only tells part of the story. Okay, a 62% jump is awesome, no doubt. But for a business like a stock exchange, we really need to know what's driving it. Is it just one specific thing that's on fire, or is this growth happening across the board? It's time to peel back another layer.
And here it is. This is basically the engine room of the whole operation. A whopping 76% of BSE's total revenue comes from just one single source: transaction charges. These are the little fees the exchange collects every single time a trade happens. So the key takeaway here is this: that huge revenue explosion is almost entirely because of a boom in this one specific area. And when I say boom, I mean a boom. Just look at the scale of this. Last year, transaction charges brought in about 51 crore rupees. This past quarter, a staggering 952 crore rupees. That's not just growth. That's an astronomical leap. It tells you that trading activity on the exchange has just gone through the roof. So we've got these soaring revenues, all driven by transaction fees. That's great. But the real secret here, the reason investors are getting so excited, isn't just about the top line. It's about what happens on the way down to the bottom line, the profit. And this is where the mystery really gets interesting. While that revenue grew by an impressive 62%, the company's net profit grew by nearly 200%. That's 3 times faster. How on earth is that even possible? Well, the answer lies in a really powerful financial concept. And that concept is called operating leverage. Think of it like this. A stock exchange has mostly fixed costs, right? The trading platform, the servers, the staff, those things cost about the same whether 10 million trades happen or 100 million trades happen. So once those fixed costs are covered, every extra rupee of revenue from all those new trades flows almost directly to the profit line. It's incredibly powerful. And you can see the real-world impact of this right here. The effect of that operating leverage is crystal clear when you look at the net profit margins. Last year, for every 100 rupees in revenue, BSE made 26 rupees in profit. This year, that number has jumped all the way to 45 rupees. The business hasn't just gotten bigger, it's become dramatically more profitable.
Now, you might be thinking, okay, but if a business is so reliant on trading volumes, isn't that super volatile and risky? And that's a fair question. But there's another part of BSE's model that actually provides a really important counterbalance.
This is the corporate services segment. This includes things like the fees companies pay just to be listed on the exchange. As you can see, its revenue growth is pretty modest, but that's the whole point. It provides this steady, predictable stream of income that isn't really affected by the day-to-day craziness of the market. It gives the whole business a solid, stable foundation.
Okay, so let's put all of our clues together. We have explosive revenue driven by a massive surge in trading, the magic of operating leverage turning that revenue into even more profit, and a stable business segment providing a nice balance. Now we can really see why the market is rewarding this stock so heavily.
So here's the crucial thing. Investors aren't just seeing revenue growth. They're seeing a highly scalable business model where that growth translates into even faster profit growth. That operating leverage isn't some textbook theory anymore. It's right there, visible in the numbers. They're seeing margins expand like crazy, and it's all being powered by the company's core operations, which is a huge sign of high-quality earnings.
So we now understand why the stock rallied. But this all leads to the final and maybe the most important question for anyone looking at BSE today. After this huge run-up, is it still a good investment? And this really all comes down to valuation.
Right now, BSE is trading at what's called a price-to-earnings, or PE ratio, of around 60. In simple terms, that means you're paying 60 rupees for every 1 rupee of the company's annual profit. By most traditional yardsticks, that's high. It could be seen as a warning sign that the stock is just plain expensive.
But, and this is a huge but, here is the powerful counterargument. Over the last 5 years, this company has grown its profits at a compounded rate of 65% per year. That is just phenomenal sustained growth. So the people who are bullish on the stock would argue that, yeah, a high PE is totally justified for a company that can deliver that kind of incredible performance.
And that brings us to the final takeaway. We've seen the mechanics of the rally, a scalable model just firing on all cylinders. The question for the future is whether this performance is just a one-off surge or if it's the new normal. So, is today's high price a red flag, or is it simply the cost of admission for a company that has unlocked a whole new level of profitability? That's the question to ponder. Thanks for tuning in.